everyone, am I audible? Please raise a thumbs up if I'm audible. So, are you ready for the session? Write in a chat box. So, good evening, everyone. I hope you're doing well. If you're feeling great, please write in a chat box. So, this is Shrashti Maheshwari. I'm a program manager at Pregrad. So, first of all, I wanted to introduce Pregrad is an edtech platform along with the Career Assist Cell. We bridge the gap between the student and the industrial mentor. And our mission is to kickstarting a career before graduation. Pregrad was founded by Ankur Saxena and Madhav Chaturvedi in 2021. Pregrad offers many upskilling programs powered by Wipro, IBM, and many more. So let's begin the session. May I know the excitement level on the scale of 0 to 10? Write in the chat box. Okay, so let's welcome our guest speaker, Dheeraj Ranku, who is a financial analyst at Gullan Geher and Mohan. Dheeraj will be a guest speaker of this webinar. So all the attendees, please welcome him.
Hello. Hi guys.
Hi Dheeraj.
Am I audible?
Yes, you're audible. Hi Dheeraj, how are you doing?
I'm good. I'm good. How are you all doing?
Very good, very good.
Great.
All the
Yep.
attendees, I wanted to tell you your mics and cameras are off. Write your queries in the chat box, and if required, please tell me. I will open your mics at the end of the session. Thank you, everyone. Dheeraj, session is
Yep.
all yours.
Yeah. Thank you, Srishti. So, yeah. Very good evening, everyone. How are you all doing? I guess everyone is doing great. Uh, Feeling so. Yeah. So, thank you, Srishti, for a warm welcome. So, as Srishti said, my name is Dheeraj Tunku. I'm a financial analyst at Gallagher and Mohan. So, I've been working in this corporate industry since the last 6 years, 6 plus years, and I've been working with various industries and companies so far. Because before joining Gallagher One, I was in the consultancy firm called Grant Thornton. So in that, I've been doing financial models, preparing financial analysis. So it's like voice is not there. Am I audible, perfectly audible, or is it something
Yes,
going up and down?
you're audible properly. Archit, please try again.
If someone could, move a thumbs up for me if I am audible perfectly.
Yes, you're audible. Voice is bit low.
No, I'm just my headphones are just like a bit too noisy. I don't know. It's because of the headphone. Just let me get rid of this. Yeah. Am I audible now? Perfectly.
Yes, sir. Now you're audible.
Okay. Thank you. Thank you. Thank you. Yeah. Yeah. So yeah. So like I was saying, I've been working and like I've been preparing financial models, doing financial analysis, valuations, business valuations, uh, more into commercial business. Uh, but now I've started off with the real estate valuations. I've been, like it's been 1 year with Gallagher and Mohan, and working with them closely for the real estate valuation. It's a new industry for me, but yeah, it's you learn every day. That's my day-to-day motto. Yeah. So So moving on to for today's session. So today's session is all about financial forecasting. Uh, like the I guess I'm very much sure Sasti has already given you the heads up for this session, and so let's get started. Yeah, let me present my screen. Uh, Let me know when you can see my screen.
It's not visible.
Okay.
Yes, now it's
Is it
visible.
is it now? Oh, good. Okay. Yeah. So today's session is all about financial forecasting. So I'll be touching upon some of the basics of financial forecasting, and in the middle of that, I'll be giving you some useful tips to how to, you know, like uh, as a financial analyst, how you forecast the numbers, how you identify those numbers, little bit of accounting knowledge, and so on and so forth. So we'll start upon the importance of financial forecasting. We'll go for the what are the benefits of financial forecasting, why the industries or companies do the financial forecasting, what are the benefits, some of the technology that the on the industry level the companies uses, and some of the methods of financial forecasting, and I'll be touching upon on my experience, what I've been doing since this last 6 years. So moving on to the financial forecasting, so it's like financial forecasting in brief is like financial forecasting is an essential tool for business to plan and make informed decisions. So basically, when a company is planning something, or they are um, thinking of investing, or they are thinking of do let's do a budgeting or a forecasting. See, budgeting and forecasting goes hands in hand. Budgeting means you create a budget for the future years or the future months. Forecasting is same as budgeting. Forecasting, you forecast for future for make a future decision, or to see what will happen in the future in the current scenario. So financial forecasting is an essential tool to to give you an idea that what a business will look like after a month, or after a 6 months, half yearly, quarterly, or yearly. It's also an interesting tool to for business to be have an informed decision. They can make strategic, uh, you know, uh, systematic risk upon what to do, what not to do. Uh, Strategic decision they can take, and it can be a hinge over all the competitions they have in that scenario, and they can be in a step ahead from their competitors. So moving on to the importance of financial forecasting. So I have pointed out 3 points which I um, you know knows, and I believe that this is the 3 things which is accurate to define a financial forecasting. So the first point is like financial forecasting helps business in anticipate future. Like I already said, it gives you an idea, or gives you a strategic plan to how a business will look like after a quarterly or yearly or a half yearly month. The second point is it assists in budgeting, resource allocation, setting financial goals, financial health of the organization. So basically, if I doing a financial forecasting, it's just like I'm forecasting something, be it be a revenue, be it be income statement, sorry, the expenses, be it the other normal incomes, eh, maybe a depreciation or something. It gives you an idea, like if I'm earning, for example, if a company is earning a $1 million of revenue of the first year, and they are thinking of, okay, let's we are creating these kind of revenue. What could we, what should we do to, to increase this revenue? What are the key elements we can add into the our company or organization to increase this revenue? So they forecast. Okay, so this is the revenue. Okay, we can take, according to this current scenario, we can take a 4% growth or a 5% growth. They can take it, or they can go, or more deep into it, to have a, to learn from the historical data. What are the historical data is? What are the trends which have been going on? And based on that trend, they can, budget or allocate their resources or incomes in a uh, particular area where they can, earn those revenues. So the most important thing is to have a clear financial goals. Okay, what the company is planning to, what they want to do, and what they want to be there to achieve this goal. And the third point is accurate forecasts provide a competitive edge by enabling proactive decisions and risk management. So an accurate forecast is, the most important thing. If your forecast is not accurate, the, the company will, will take a wrong decision on something. So if I say, like, I have, for example, if I take an example of Apple, so they will be releasing those models of iPhones every like 2 years or 3 years, but they know, like, every 2 or 3 years, if I, introduce a new model or a new phone, it will go in the market and it will do good. So behind that, there is a lot of strategic decisions have been taken, a lot of financial analysis have been done, a lot of budgeting have been done to get out of from the to in the market, and do something like that. So it gives, uh, so if your forecast is correct, your decision making will be correct. If your forecast is not correct, because in decision making you are deciding on your future events, not on the current situations. So if your forecast is correct, your future decision will be correct, and your company and industry will go on for further. And also it reduces the risk of, going blindly into the market. Yep. So this the second slide will learn about the benefits of financial forecasting. So again, I have pointed out three benefits, which I believe that this is the thing. It covers almost everything. So the first point is aids in determining whether a proposed venture deserves the entrepreneur's investment of capital and effort. Okay, so this point explains, like, financial forecasting helps. Okay, if a company is planning to acquire a new business, or they are jumping into a new industry, like for example, a steel industry is planning to go on a solar power industry, because their main focus on putting up iron and steel, making these rods and everything, but they are planning to move into a solar manufacturing industry. The base is similar, because solar manufacturing is part of manufacturing only. They are a part of manufacturing, but the product is different. So, if a new business is there, so we have to have a concrete research on that business. So financial forecasting helps you on, to do a financial research on it, have a concrete, numbers and assumptions of that, and then it helps the entrepreneurs to, invest, and his efforts and times are, well managed, and its capital doesn't lose anywhere. The second point is allows a comparison of strategic alternatives. So, financial forecasting, if I'm jumping into another industry, it opens up options, ocean of options for the entrepreneurs or the investors. Like, uh,
Dheeraj, we
name of
have a question. Does it undercome FP and analysis?
uh, F. Sorry, say it again. I
Does
didn't
it
get you.
come under FP&A analysis?
FP&A, yes, financial planning and analysis. You're talking about.
This is
Is
what
it
we are
financial
talking
planning analysis? FP you're talking about, or FB or Bombay? B for
FP,
Bombay or B?
FP, FP.
Yeah, yeah, yeah. It comes under financial planning and analysis. See,
budgeting, financial forecasting, financial modeling, and financial planning analysis go hands in hand. They all used in other terms wherever they're required, but they go in hand. Everything, like every word or every terms is same, but their the terminology or the usage of the words are different in every other industry. If you go in a particular manufacturing industry, they will tell you, okay, do a financial planning and analysis. We have to plan our incomes and revenues and expenses to analyze, and then we can forecast our company's products or anything. If I go to for budgeting, budget same. We are forecasting the budgets for a revenue. If I'm earning a revenue of $100,000 a year, okay, what will be if I want to achieve a $200,000? What I need to do? So that is budgeting. If it is a financial forecasting, same thing. If it is a financial modeling, I'm preparing a model to to give an idea to our stakeholders or the board of directors or the investors to, okay, have a look of this. This is the things, this is the numbers looks like in the near future. So let's go hand in hand. So is it something I answered your question, or is it something different?
Yes, Pratham. Pratham is saying yes.
Okay, thank you. Okay, so moving on, the last point is helps the entrepreneur and investors understand the strength and weaknesses of the venture. Okay, this is the important point because while doing a financial forecasting of a new business or a new venture, you come to know about the strength and weakness of the venture. Okay, so you know about your strength of weakness of the organization which you are working on, or the organization which is looking after to enter into a new business. So you know your strength and weakness. For example, if I'm working on an iron and steel industry, so I know manufacturing is my strength. I am making products like iron and steel. So if I'm venturing into a solar power industry, so what are the benefits I will get if I venture into it? So what is the market condition of solar power industry? What are the market capitalization of that industry? What are the near future? How much growth rate it will give me? How much growth rate it will grow for that industry in the near future? So that is the strength and weakness. Okay, so in India it is fine, we are developing, but if we go to the more developed countries like US and Europe, they're already developed. So their market is stagnant. So in that, you feel you're more uncomfortable to put up a venture of solar manufacturing industry. But in India, it's still growing. We are developing real estate, so every industry needs solar power, and we are moving into a carbon zero country. So yeah, so it will help. So from that, you will come to know the strength and weakness of the new venture you are looking into. Okay, so moving on. Next, okay, so this slide talks about the what are the companies and industries looking for financial analysts. Is give you an idea, like what are the industries which are looking for a financial analyst to do financial modeling, do financial forecasting, financial analysis. So the investment banking firms, for example, JP Morgan, Goldman Sachs, private equity firms like Blackstone, KKR, Carlyle Group, venture capital firms like Anderson Horowitz, Kleiner Perkins, First Round Capital. You heard of some of the names, but some of the names are they are in disguised capital firms. They don't come to the market as they don't face the market as such, but in the background they have a lot of money. They do a lot of investments. And
And
we
could you please brief explain the difference between financial planning and financial modeling to the
okay.
audience?
So yeah, see. So financial modeling and financial planning is on the same side. It's just a face of a two coin. So financial modeling means I am preparing a model. In that, I am planning something. Okay. So financial modeling, I am creating an Excel model or any, if I'm working on a software, a financial model software, I'm preparing a model. I'm preparing an Excel model, Excel sheet, income statement, balance sheet. Okay, to visualize what what will be the numbers look like. But in that, I am planning something. I am assuming some of the things. Okay, so okay, the revenue is okay. For the past 5 years, the revenue is growing 5%. Okay, now but now I think it will grow by 6% because our customers have grown, our company's customers have grown, the market's conditions are accurate to go in the market. People are buying our products. It's there is no uncertainty can happen. So I can say, okay, I can assume a 6% or 10% growth in our revenue. So that I am planning for every year, first year, second year, third year, and the future years. So modeling, financial modeling is I'm preparing an Excel model to visualize or to represent how a number looks. But in that I'm planning that, okay, this revenue will grow this percent, this expense will grow by this percent. So am I able to answer your question?
Raise a thumbs up, Alfred. We have another question. What is the work of financial analyst?
Okay, so a financial analyst works for everything, be it budgeting, a financial analyst can do, be it be it financial planning analysis, a financial analyst can do, financial modeling, financial analyst can do. So financial analyst is a whole, they can do whole thing. So it's a package. So if you are searching in many companies, if some vacancies are coming from the companies in the LinkedIn something, they will be telling you, okay, we want a financial analyst in our company. But if you go to the profile, what they are asking for it, the job description, they're asking the core accounting. Okay, can you do budgeting? Okay, can you do analysis? Can you do scenario analysis? Can you do this? Can you do a auditing for specific thing? So in that, the naming convention is this, but they're asking for a core accounting thing. If an investment banking firm gives you a job description, they want a financial analyst who can do a financial modeling, who can do scenario analysis, who can do variance analysis, who is more able to do a statistical analysis for a given given income statement or balance sheet. So financial includes everything, core accounting as well and core finance as well. So you can separate yourself, but a basic thing for a financial analyst is to do financial planning and financial modeling. Am I giving you an answer, or is something you have more questions to ask?
How to do budgeting and
Okay.
how to get started.
Okay. So for budgeting, okay, that see for financial forecasting and budgeting, so it will be on altogether a different lecture for me to take. But okay, so in a brief, budgeting is like for forecasting for a near future, like for like half yearly, or maybe a monthly, or maybe an yearly. That is for budgeting. Budgeting is for near future. Forecasting is for far future, like 5 years, 10 years down the line, or 5 years down the line, or the 15 years down the line, or 20 years down the line. How our company or how our industry or how our company will look like. Budgeting is for near future, yearly, monthly, quarterly, or half yearly, and they start on hand in hand. In financial forecasting as well, we take the historical data, we analyze the historical data, we take some assumptions based on the current scenario, and we plan it and we model it. In budgeting, yes, we take the the historical data, the historical financials, and we see what are the trends have been going on, and based on the current scenario, we budget for the near future, like, okay, in the next 3 months, what will happen, how our company will look, how the numbers will look. So that is the budget we want to achieve. Budget means the achievable things. We have to achieve this thing. So that's why we budget. Sorry, like I'll give an example. In our day-to-day scenario, we budget something, right? If I want to do an MBA, so starting I have to budget myself, okay, how much money I need to go in a particular school. Okay, so first step is I have to do CAT and MAT. I have to prepare for it. So that is your budgeting. You are budgeting yourself. Okay, and most probably you correct your goals. Okay, I've done this, I've done this, I've done this. To achieve this, I'm budgeting my certain steps to achieve certain goal. So budgeting means to achieve a certain goal, I am considering some amount of steps to achieve the particular goal. But in forecasting, I am I am forecasting for the far future, which is nowhere near, like 10 years, 5 years, 15 years down the line, to give an idea that, okay, for like 10 years down the line, this will the situation of the company will look like, but it don't depend. We don't, like, the company like doesn't require to achieve those goals, but okay, let's see how far we can achieve those things. That's the thing. Any more?
We have many questions.
Hello.
Yes, Tejas, we have many questions. Let's end
Okay.
up with the end.
Okay, sure. No worries. Okay, so I'll move fast a little
Yes,
bit because,
let's move to the
yeah,
next slide. Then we will have a,
sure,
in the last we have a QA round.
sure. Okay, so okay, moving on. Some of the tips for a financial forecasting. So the first tip is, like, for a company or for an individual, if we are doing a financial forecasting for something, have to have a clear financial goals and objectives. What are your goals? What you need to achieve, or what a company need to achieve? They have a clear goal for it. If a company decides we have to venture into a new business, okay, that is the clear goal. And we've decided our industry we have to venture into. So that is, if I'm venturing into a solar industry, okay, that is my goal. We have to venture into solar industry. So what I need to do, what I steps need to be followed to venture into that. So I have to have the clear financial goals. How much money I needed to invest, how much percentage of return of investment I am expecting, what are the internal rate of returns I'll be getting if I venture into that business. Okay, so these kinds of KPIs, key performance indicators, I have to be in, have to made up my mind. Okay, these the things are there, but because these are the things I have in my mind, the company have in their mind, but
Take second.
like what is the particular percentage they're looking for, it will come from the financial forecasting or financial planning, what a financial analyst will do for the company. So the first thing is define long-term financial goals. Okay, I need to venture into a business, and then break down the goals into short-term objectives. Okay, so first I need a thorough financial research on what the industry looks like. Okay, what is the growth rate of industry? How the industry will look like after 3 or 5 years? What is the current market situation of that company, of that industry? What are the how many competitors are there who's already in the in the ground doing those things? So that is the small goal objectives we have broken down. The third is make the goal smart. Smart means specific, measurable, achievable, relevant, and time bound. You have to have your goal specific. No down and up and down. No, have to be specific, have to be measurable in terms of number. Okay, I have to be in this industry. What are the what are the return of investment I have to do it? Okay, I said 30% return of investment. Okay, for that 30% of return of investment, what are the financials of the company? How that industry has performed over the last 5 years, and have to have the achievable. Okay, it doesn't mean like you have put up some goal, but it doesn't mean that you have not planning and you're not achieving. It should be achievable. So have to we have a realistic goals for that. Have to be relevant. Okay, it should be relevant based on your should be concerned about the stakeholders of the company, of the industries, sorry, of your company, and the industries have to be, stakeholders have to be relevant. Your board of directors have to be relevant about, okay, we are venturing into new business. Okay, this is the things we have to do, and we are okay with that. They have to be time bound. Limited time, more research will get to the objectives. Time bound. If you expand your time, your resources will be scattered. Your time will be wasted. Your efforts will be wasted, and in some cases that goal would not be achieved. So it should be time bound. Okay, specific time have to be created. After 2 years, I have to need to be a venture into a business. Okay, these are the steps I have to do. And the last point is consider potential obstacles and develop strategies. Okay, so before venturing into some business or industry and particular company, have the potential obstacles. Okay, if I'm in manufacturing iron and steel, okay, what are the potential obstacles I need to develop? Can I obstruct me on venturing into that business? So that need to be developed, and for that obstacles I need to develop strategies. Second is creating a comprehensive budget. Okay, so here comes the budgeting thing. So if I am venturing into a business the goal is set after 2 years, I have to venture into a new business. So determine our the income sources. So income sources, like for a manufacturing business, the income sources is selling the iron and steel products. Okay, but if I turn around for the service industry, they are creating revenue or generating revenue by giving out these services like you know uh, hotel industry, like for example, particular service industry. If I talk about Zomato or Swiggy, which they are delivering something, but they are giving out services, right? So you have to determine your income sources and then track your expenses. So how much expenses I have, I need to track. Can I lower our expenses? Can I eliminate some of the expenses which are not needed? And then set the financial goals, okay, that I need to achieve. And then according to that financial goals, I'll allocate the incomes. Okay, for this, if I'm venturing into, that is my financial goal. I have to venture into a new business. I have to invest $10 million of amount in that. So for that, what is my revenue? What are my expenses? Okay, I can reduce my expenses. This is the income. Okay, this is much I'm earning for the next for the next 1 year or 1.5 years. I can earn much this. Okay, I can introduce a cash or take a loan. Okay, that is my allocated incomes which I can keep for that business. And
Hi,
review and
hi,
yeah,
Dheeraj. Sorry for
yeah,
interruption. Like, could you please explain cost of capital?
yeah. So cost of capital is nothing. If you can, it says from the word itself, the cost of capital. So to to have a capital or to what do you call it's like, if I'm introducing a capital or if I'm raising a capital, what are the costs have been associated for that? So for example, if a company is going for an IPO, initial public offering, or is going out in a public, or is raising a debt, okay, is taking a loan from a bank. Debt and loan is the same thing. So what are the costs associated to it? If I'm taking a loan from the bank, so there will be a processing fee, processing charge, there will be some interest charge, and so on. So that is the cost of my capital. If I am going out in a public, I'm issuing shares, and I'm doing an initial public offering, IPOs. So there is some cost associated to it. So that cost is higher than taking a debt. That is a separate altogether a lecture, a separate altogether a topic of IPOs and how IPOs work. But on a brief, how much cost associated of raising a capital? That is cost of capital. Any more question?
All the attendees, your mics are already on. If you want to speak, just raise your hands and you can speak. Yes, we have a question. Like, DCF is an example of
DCF.
DCF.
DCF, I'm not sure. Like in what context they're talking about. I'm just wondering.
I don't know. Baba, could you please explain in what context you are talking about DCF and the rate that an
DCF or
investor is?
BCF? Sorry, DCF or BCF? I'm just
DCF,
hearing.
DCF.
Okay, D for Delhi, right?
Yeah, D for Delhi.
Okay, sorry. I'm just hearing some of the other words. So sorry for that. Yeah, so DCF is discounted cash flow.
Discounted cash
It
flow.
is, yeah, so it is a method which is used for valuating a business. If I'm doing a valuation, so again, it's a separate topic for it. So if I'm doing a valuation for a company, so there are three methods. One is income method, three methods, or you can say approach: income approach, market approach, and cost approach. So in income approach, there is a discounted cash flow. I am discounting my cash flow based on the weighted average capital, cost of capital of of my particular company, and based on that, I am discounting the cash flow for the past 10 years of whatever the model is, like 10 years, 20 years. I'm discounting it, and about that discount is giving me the actual price or actual investment which I need to be done or need to be invest in a particular business. So basically, I'm discounting the cash flow which is generated by the company or investors. Any more? We can take it afterwards. Like if I finish this, we can take it afterwards. Hold your all your questions. We can do it afterwards, I guess. Is it fine? Hello, hello, anyone? Just can you hear me?
Yes, sir.
Y- Yeah, I'm saying that we can hold your questions like we can finish it and afterwards we can have a question Q&A session. Is it
Okay, sir.
okay? Okay, thank you so much. Yeah. Okay, so the next part is analyzing the historical data for better forecast. So I have pointed out four options. So these four options, I guess, covers all the things. So the first option is identify the key performance indicators. If I'm analyzing a historical data for any financial statements, be it income statement, and some of them call a profit and loss statement, balance sheet, and cash flow statement. So these are the three financial statements which I can look for the historical data. So if I can take a company's historical data for 5 years or 10 years, past years, so I can in that I have to need to point out what are the key performance indicators I need to identify. So the key performance indicators, as I believe, is like the return on investment. What was the return on investment? What was the revenue for that particular of that company? What was the uh, profit after sorry what was the earning before interest and tax is the most important thing. Some of them, some industrial norms call them operating profit or earning before interest and tax, or operating profit is the same thing. The next point is profit after tax, very important. What is the operating cash flow? Very important. These are the some of the performance indicators I have to point out, and based on that, I need to analyze and plan for the next future years. Second option, use data visualization tools like, for example, Power BI, Tableau, Google Charts. And there are some of the other things I've not pointed out, but there are a lot of visualization tools available in the market. So visualization tools helps you determine how you can graphically represent all data. Okay, so this is the revenue which have grown or which have decreased. Okay, this have decreased in year two. Why have decreased? Something has happened. Some uncertain events have happened. So it will give a specific idea. Okay, this has happened in the past years. Third option is consider external factors. Okay, external factor means, for example, like the COVID had happened. No one has thought we will be working from home for last 2 3 4 years down the line. So all they're working from office, but that was an uncertain situation. That was an external factors which have affected the business. A lot of business you know uh, loses their investments. Lot of layoffs have happened. So that's the thing. That is the external factors which you can't control, but you have to plan for it. And option four is a case study. Okay, take one case study of a normal company. A company usually do, an industry usually do. I have done it. Taken If I'm venturing into a business or I'm developing a strategic plan, I can take a case study for any other big companies which are bigger than me, which have done something in the past. I can take a case study which is available. I can study. Okay, this is the thing which have Apple done to bring in the market. Okay, this is the thing which this Zomato have done in the past 3 years to be on the top of the things, beating Swiggy on every part of things. So that's the case study you can take for yourself to study. Okay, this is the things have done by the other companies. So why don't we? Okay. The next thing is using financial tools and software for forecasting. So there are a lot of forecasting tools and software I will discuss in the next slide as well. So what are the key things it will give an industry and strategic step ahead? First of all, the automation efficiency. It gives a company, if an industry introduce a software for financial modeling and financial analysis. So okay, Excel modeling is there, but some of the softwares give you more, representable manner of summary dashboards, create of flow charts and graphs and sheets, and they can just in the assumptions you put assumptions, and they can create the whole financial model for you. So that is the efficiency you need. Okay, so but the assumptions you are putting in have to be logical, have to be analytical, but the whole modeling and thing, it will be a 5 minutes thing. The more some of the softwares can create their own themselves all the models. The second is integration and real-time updates. Okay, some of the softwares helps you real-time updates. Okay, in the current situations, okay, this in when the Russian Ukraine war has been started, so it will give you an idea. Okay, so the Russian Ukraine war have been started. Okay, so it can affect the oil industry because most of the things have been flowing through that Mediterranean Sea or the Red Sea or the Red River. So okay, so there is war is going on. So most of the things or most of the products market prices will go down, or the prices will go up. Some of the things for some of the raw materials which you are using, some of the prices will go up. Market will be down. Customer will go on for another products or another sufficient products. That is the real time updates which you can put it up in the software as an assumptions, and they can analyze and create a number for it. Okay, this is the things that can happen, and this is the flow of numbers which can happen. Okay, revenue can go on by 5% for this reason. Expenses can go up for this reason. So that's the thing. And third is scenario modeling. Scenario modeling is specific scenario you are creating to have a strategic move. So for example, this COVID situation has happened, or the Russian Ukraine war. That's a scenario. Okay, so this scenario has happened. What if our 5%? What if our revenue go down by 10%? So what will be our scenario in the next 5 years? So it will give you a scenario. You put up some assumptions in the scenario modeling, and it will pop up some numbers. Okay, so the revenue was 1 million. If I for the past and the next 5 years, it will go about 10 years. Okay, I'm earning 500,000. So what I need to do? Okay, if I'm earning good, my market is good. If I'm doing a 5% increase in our revenue, okay, so this is the thing. So that is scenario modeling. I'm creating some scenarios, I'm analyzing it, and the model itself giving me some numbers to look after. And third, and the last four is collaborative forecasting. Collaborative means the financial the software which I'm installing to create a financial analysis or the financial modeling or the financial forecasting has to be collaborative, since any one individual is not working. It should be go hand in hand with other departments as well. So in our industry there is different departments, right? So there is revenue department, there is an expense department, there is a vendor management department, there is an inventory management department. So everyone goes hand in hand, and everyone can see, okay, this is the thing. So everyone can give their inputs. Okay, this is the stock which is available right now. You cannot assume a higher stock for it. You have to assume what is current scenario as. Okay, I can assure you it will go up by 10%. Okay, assume that only. Don't forecast for 20%. Forecast for 10% only. So have to be collaborative. So everyone can see the model or the the financial forecast, and everyone can give the inputs, right inputs, which is needed. Okay. The second point is monitoring and adjusting your financial forecast. It's very, very very important to have your financial forecast adjusted every quarterly or half yearly, I would say. See, because the market is dynamic, it changes every day, and so your financial forecast have to have in line with the market conditions. So regularly review your actual financial performance. Use key performance indicators as I talked about. Conduct variance analysis. What are the variances have been looking of these? Like in May, I'm sitting in May, so I have model for May. Okay, so after 5 years, okay, after 6 months in December, I have been checking. Okay, this is the things have happened. Okay, did it reflecting in my forecast? Oh, okay, no, I need to add something so reflect in my forecast so that I can make decisions correctly. And the last part is adjust your forecast as needed. Adjusting your forecast is very important thing. So whatever the market conditions are changing, you need to adjust your numbers, you need to adjust your assumptions accordingly. The law is common challenges is in financial forecasting. What are the challenges come up? So the first challenge is lack of historical data. Sometimes it happens is like you have a very nominal or very minimal data to be to forecast or to make assumptions or to make a analysis by taking up the historical data, because there is no historical data available. If I am venturing into a new business and I'm investing in certain business, that business is not there for 5 or 3 years. It just started off now. So it will be difficult to to know what was the growth rate in the past 5 years. I don't have the data. Okay, so it is in that sometimes I have to assume some of the things of my own, or by discussing with the stakeholders or the board of directors or the industry experts. Okay, so that is the lack of historical data. which affects your financial forecasting. Second is external factors. Of course, the external factors is the environment which you're working or where the industry works, the market conditions, it differs. And it happens to be like, it cannot go hand in hand. You have to be, you know, have to be parallel. You have to make yourself parallel with the market conditions. The third is inaccurate assumptions. Yeah, of course, like, sometimes happened. I have inaccurately assumed some of the things. Like I said, like, the stock is this much, 500 stocks is left for 500 products have been left in the stock. But I have assumed, okay, in the next 6 months or so, it will go up by 10%. No, the stock vendor, the stock manager, he said, okay, no, it will not, don't go up by 10%. It will go up by 5% or something. So the assumption is wrong. So my financial forecasting will be wrong. So, and the fourth point is lack of collaboration. So, last point in the last slide I've talked about the collaboration among the different departments. So if there is no lack of coordinations, there is lack of coordination, and there is no, inputs of other departments, it will be hard to, focus accurately, and, have the decision making will be, will be down. And the last point is unforeseen events. Any events which can happen, like for COVID, if you say so. That was an unforeseen event. No one could imagine that the market will go down in such a low. Okay, so here are some useful tips for the successful financial forecasting, which we have been discussing so far. So, but to brief it out here and to put it up on points of here. So, the start with historical data, of course. Set realistic goals. Consider various scenarios. Track your progress regularly. Involve your team. Like I said, use technology to your advantage. Yes, integrate softwares or something. Be conservative with revenue projections. Yeah. Account for non-recurring expenses. Yeah. So there are some things which we can't focus because of the non-recurring expenses, because some of the expenses, like, okay, if I'm in the iron and steel industry, so in iron and steel, raw materials expenses or the workers' salary and expenses, that is fixed expenses. I have to give out those expenses, I pay out those expenses. But some of the expenses are non-recurring expenses. That non-recurring means, I have audited for the financials for this year only. The next year it will come after like 6 or 5 months or the year passed. Or I have paid some professional fees to do some financial modeling to a consultancy firm to do a financial modeling for our company. So that is a one-time expense. That is not recurring. That will happen in one time. Okay, so we need to account for. And the last point is learn from the past. What the industries or what company we have, what the company has done in their past, what are the mistakes they have done, they have to be learned and move ahead from it. Okay, moving on, some tips based on my experience as a financial analyst. What I've learned so far, what I've did is, like, the first point is understanding the business of a client properly. So, like I said, I was working in the consultancy firm. So in that, I have been doing financial modeling and preparing financial modeling for number of industries. So it was not limited to, iron and steel. It was hospitality. It was sugar industry. It was tire industry. So a lot of things I have done. So the most important thing is understand the business you are venturing into. If it is new business, you have to have a clear understanding of that business. Second part is, if you are a financial analyst and if you are, working in a consultancy firm, visiting the business site at a regular interval is must. Okay, so regularly go how the things are working, how the things are changing. If it is a new technology have been introduced, what are the things they are doing? You have to have that idea. And sometimes you have to become an accountant, a pure accountant sometimes, to understand, okay, how this revenue have been growing, or also, okay, how much revenue has been there. Okay, this much of expenses was there in the past years, but not in the future years. How about it? Why it is not there? Is it something to look for? Is it something I need to focus on? So something I have to become an accountant. You have to have an accounting knowledge for it. Thorough research on the methods of financial forecasting. So if you are forecasting something, you have to have a research on what method should I use to forecast, to forecast the financial numbers or the financial statements. So do I need to use a straight line method? Do I need to do the linear regression method? So have to research. And the last part is hands-on some Excel formulas and skills. You have to have some Excel skills and formulas in on your hand. For example, XLOOKUP, which is introduced last, I guess, past 2 years. Um, some if index, match, VBA macros, Power BI, to able to do a financial modeling and financial forecasting. So because since most of the companies uses Excel for that, but some of the companies, bigger companies who can afford it, who can integrate some of the softwares, they use softwares, but you have to have some these skills at least to to be able to do financial modeling on a basic part of it. Okay, so these are the financial modeling and tools and technology which are there in the market. So I have featured out some 4 important features which I believe that is the most important things. So Cube was in Cube, Oracle BI, Jira, and Finmark are all US based companies. They're all came to the market in 2015 or 16. Oracle BI is far more uh, old, like 2007, must guess. And Modano. Modano is an Australian firm, so they develop financial modeling platform. So in that, you have an Excel model, and you can just put up your assumptions. The whole model will create itself. So there, the use of deployment, interactive visual exploration, analytics, dashboard reporting, they differ for everything. For Oracle BI, it is very hard to deploy an administrator because it is very expensive, first of all, and in a large industry, in a large company, it is very difficult to integrate those software because it requires lot of efforts, lot of time, a lot of money as well. In Jira, Finmark, it's easy to use. Analytical dashboards, okay. Reporting is not there for Modano as well. And yeah. Okay, so moving on to the last slides for the financial forecasting methods. So we'll talk about for the top 4 financial forecasting methods which a company or industry or a financial analyst uses to do a financial forecasting. Okay, so I have pointed out 4 of the things which I can separate it out, or I can categorize it out. For a straight line, the use is constant growth rate. We use constant growth rate in straight line. Like if I have assuming 4% growth, I'll be assuming 4% growth for the next 2 or 3 years, 5 years. So math involved is minimum level. No math is involved. And data needed is the historical data. I have analyzed the historical data. I come to know that 4% growth is the rate. Okay, I'll go on for 4% interest or 4% growth rate. Moving average is a repeated forecast. You take an average of the revenue for the past 3 months or 5 months, and then you forecast for the next month, and then you take, and it goes on. We'll talk about in the next slide. Math level minimum, historical data is needed. Simple linear regression is comparing one independent variable with one dependent variable. Okay, I need to forecast revenue, so the revenue is dependent upon something, for example, the revenue is dependent upon the product which I'm manufacturing. Okay, so how the for example, if I take an example of an iron and steel industry, so my product is iron and steel. I'm generating a revenue from selling out those products. Okay, how the industry is growing so far. So that my revenue is dependent on how the product will work in the market. Okay, the math involves statistical level and a sample of relevant observations I need. And there is multiple linear regressions comparing one or more independent variables with the dependent variables. So there is revenue is a dependent variable, and to generate those revenue, there is an independent variable which is there in the market, and based on that, my revenue will forecast or will go or will behave like that. Again, statistical knowledge is involved, and we need to have some observations. So in a straight line method, as I talked earlier, so it's the simplest and easy way to follow a forecasting method. Okay, for example, a retail business that assumes a constant sales growth of 4% for the next 5 years. So if I see, I have screenshot some of the Excel formulas here or Excel sheets here, which demonstrates the sales growth. So I've taken up sales growth of 4%. So the revenue have grown from 81,000 to 84, and then for the every 17, 18, 19, 20, 21. So look, it will go on forever. 4%, 4%, 4%. Every year, 4%. Okay, that is the method for a straight line method. Moving on to the moving average. So moving average, as I talk about, I take a moving average for the past 3 months or the 5 months. So now I'll take the average of past 3 months revenue or the past 5 months revenue, and then I'll forecast for the next month. So if you'll see in the next slide, see, I have we have calculated for January, Feb. We have taken an average of January, Feb, and March, and then we are forecasting for March. Okay, and then we'll take for the next month. We'll take for February, March, and April. Then March, April, and May. Then April, May, and June. Likewise. So there are two moving average method which are popular. One is 3 months averaging moving average, and one is five month moving average. So this was 6, and this is 5. So we'll take for 5 months: January, Feb, March, April, May. Then Feb, March, April, May, June. Likewise. Then comes, yeah. So yeah. So in the moving average, the last part is always have to have a good idea to create a line chart, to have a prepare a graphical representation of how the how that revenue or how the moving average moves. Okay, so it will give you an idea. Okay, this month was this much revenue. Okay, this month it increased. So why it is increased? Is that something we have done, or the number of products in the market have gone, or the stock have been rolling out in a timely manner. So this will give an idea. Okay, this is the things have been done. But you have to have a clear idea what moving average we need to have to to able to do a financial forecast. Should I do a 3 months average? Should I do a 5 months average? It depends solely upon how you are thinking about the company. It will move further. Okay, so the simple linear regression is taking out one independent variable and one dependent variable. So here you can see, so the independent variable is radio ads and the revenue is the dependent variable. So I'll go to the data insert tab. I'll insert a chart like you are seeing here. Okay, so insert a chart. I'll go in the format data series, which is there in the right hand side. If I click on the chart, it will pop up on the right hand side. Okay, so and then what I'll do, I'll go to the trend line option and select linear. So it will give me a trend line of what the numbers look like, or what are the it will give me a linear correlation between the revenue and the radio ads. Okay, and it will seeing a trend line. Okay, it will goes upwards. And then what I'll do, I'll just for formatting things, I'll fill up no fill, and the borderline I'll do a no borderline. And then
we have a
yeah,
question, but in Excel there is a formula forecast. This will be
yeah.
the same thing.
Sorry, for what?
In Excel there is a
Yeah.
formula forecast. This will be the same thing.
Yes. I'm coming to that only. I'm just coming to that only. I'm just representing, like, if a basic things is have to do, this is the thing, but there is a altogether of, okay, yeah. So this is the forecast. Formula is forecast. You can do a forecast by taking out the dependent variable and the independent variable, and then you can forecast in Excel. That is the formula. I was coming into that. Was just waiting for, just was explaining. Yeah, so there is forecast function. You can use that formula. Okay. Okay, so the next is multiple linear. Okay, so like I said earlier, is like one dependent variable and two independent variables. So again, that is whole of our data. If we go to data and go to data analysis, you will see a data analysis here. After, I guess some of the Excel don't have this option. You have to add in those options, which is there already available in the Excel. If you go to your file option and go to options and select add-ins and select Excel add-ins, you'll see the data analysis package here. I'll show in my Excel. Okay, you can see my screen, right? Or is it something you're not? Sushi, can you tell me if you're able to see my screen, the Excel sheet?
No, it's not visible.
Okay, let me touch here. Just a second. Yeah. Now you can see. Is it visible?
Yes, it's visible.
Okay. So if you go to your file option and go to more and then select options, you see an add-in option here. You go to add-ins and scroll down to manage add-ins and select this drop down. Select Excel add-ins is already there and select to go. For me, it is already I have that package in my Excel, so that is already corrected. So you have to select this and press OK. So if you go to your data, see this is the data analysis. It has been popped out. So if you click on it, so there is no data available, it won't give. So there are a number of things: moving average, regression, sampling, test, histograms, everything is there. So you can take a data and do a regression analysis, histogram, or a moving average. It will do for you. Okay, so you can do it in your free time in your session. Okay, let me add it. Go to intro, you know. Yeah. Okay, or else you can put up a formula for this. Okay, for putting up those regression analysis, you'll have the coefficient standard error, and then you'll put up
Dheeraj,
revenue.
mail is open.
Oh, mail is open. Now, is it visible?
Yes, Gmail is open and our conversation is.
Okay, no worries.
Everyone wait for a while.
Let me present my screen. Yep. Okay. So, is it visible?
Yes, it's visible. Dheeraj, wait a second.
Yeah.
Everyone, student, kindly wait for the end of the session. You can ask your queries. Okay, Baba, Shweta, Alkif, wait for a while. Yes, Dheeraj, you can continue.
So I was just completing it. So by putting up those data analysis thing, and you go to the option of regression, you'll have this coefficient and standard error, and then you can put up a formula saying that, okay, based on this revenue, if my sales promotion is $125 and the efficients are this, so what, and plus the advertisement. So there are two independent variables and one dependent variables. So based on the sales promotion advertising, how much revenue I can earn. It will give an will give you a number. So okay, so then you can forecast from it. So by that, thank you for your patience and listening to me so humbly. And yeah, so the podium is open for Q&A.
Yes, Shweta, speak.
Good evening, sir. Sir, my question is
Okay.
that
Yep.
this is financial modeling tool that you presented,
Mhm.
there are tools that you presented. So, is it only available for the businesses to access that, or retail investors like us who wants to invest solely so they can use it, or is it just available for financial analysts who are working in some organization?
No, see, like we in a day-to-day life, I already said in the starting of the session, it's like in our day-to-day life as well, we budget something, right? If we want to buy something or we want to achieve something, we budget ourselves or budget incomes and expenses, right? If I down the line, if I have to buy a mobile phone, I can budget. Or if I go more beyond it, if I'm investing somewhere, if I'm investing in a particular stock, I have a knowledge of the stock market, I am investing in some companies for an individual thing, so I can analysis for that company. So the data is available in the market. In the Google, you search for that company, okay, the data is available. You can search for that industry, you can create for yourself the financial modeling. But that, okay, for that I need to have an idea, okay, that is how a financial model works. can I create a financial model for a particular company for my benefits of self? If I'm investing in a stock market or something, okay, for example, let's say if I take an example of ONGC, ONGC is listed in stock exchange, and I am investing in that particular stock. So I need to analyze, right? Why do I need to invest in that? Is something it gives me an I gives me an eternal belief. Okay, if I can invest 500 or 1,000 rupees, it can grow to up to 10,000 or 20,000 rupees. But how do I know? Okay, so I need to check the financial statements of that company. So for that, I can focus. Obviously, if you have knowledge and if you have knowledge of how to create a financial model and how to focus, you can do it for your individual selves to some to invest in the stock or to invest something in your business or something. If you have a business running there, small business, you can do it, of course. But you have to have the knowledge of how a financial model is prepared. Is it fine, Shweta? Is it Shweta, right?
We have a couple of questions in the chat box. Let's start with the questions so one by one. Sir, how to do budgeting?
Okay, how to budgeting? So see, budgeting, like I already said, budgeting is goes hand in financial forecasting. So budgeting is I'm budgeting something for near future. So in budgeting, how I start, I take the historical data for of okay. So for budgeting, I'm doing a budgeting for my industry, which I'm working right now. I'm doing a budgeting for my industry for next quarterly months. Like if I'm sitting on May, I'll be forecasting for budgeting for, let's say, August or September. So what the revenue will look like, or what the financial statements will look like. So I'll take the historical data for my company only. So I'll take the historical data for past 1 year or 2 years, and then I'll see. So okay, so the revenue has grown up by this much, the expenses have grown up or decreased by this much. What are the revenues? What are the expenses were there, which were not there in the other years? So likewise, I take those numbers and do a analysis or take a comparison or take a trend analysis. Okay, this much percentage it have increased. So what I believe, by that I need to add in. So like I said, the straight line method which I have talked about, it is something like trend analysis. So I have acquired the analysis of the last historical data, and then I've taken some certain assumptions and then forecasted it. And then some of the things which need to be there to have an actual budget is something is like to have to coordinate with other departments. Okay, I have to see that, okay, what is the current scenario of my company? What are the stocks are available? What are the management is talking about? What are their future ideas for it? So in that, and what is the market conditions right now? So by that I came to know, okay, this is the things. So this 4% won't work. So I have to analyze by taking certain accurate assumptions. So I can forecast for 3 months. Okay, that is the achievable goal. I can budget, and that is the budget will take me through all the remaining months and so. So my revenue is 100,000. I have budgeted in the next 3 months. I'll have $200,000. So based on my assumptions, which I have analyzed through current situation, through current market situations, I have coordinated with other departments, and like how I have came to know.
Dheeraj, how can a non-techie break through into this field?
Okay, for okay, see, it's not about techie thing. If you're able to understand, if your background is accountancy or something, or a commerce, you have done your BCom or MCom, or done your BBA or MBA or something, you can do it. See, everything is available on the market right now. You can learn from anywhere. For that, teching thing is not technical at all. It's all about your understanding of the Excel. So you can learn about the Excel skills, which is available in the market. You can, Pregrad is there. It is there to help you. Okay, so they can teach you how to do Excel formulas, how to create formulas, how to create these skills. So they are there to help you. So this kind of things are there. So it is available in the market. So you have to have skills which need to be. It's not technical. It's just how you learn, how you understand certain things.
Like, what are the major skills one required to become a financial analyst?
So can you repeat it
What are
once
the
again?
major skills one required to become financial analyst?
Okay, so first the major skills have to have an Excel skills. Of course, that is the basic for a financial analysis or the financial analyst. You have to have an Excel knowledge, have to have these VBA macros and all the formulas on your hand, like I said, like I mentioned in my side as well. And you have to do certain certifications. Some of the certifications which I am sure Pregrad is providing you. So the some of the corporate finance things you can do, some of the CFA certifications, yeah, that will help. You can do it. So that is costly, but you can do it. And of course, there's also uh, Excel knowledge on financial models, like how to create financial models and how to use Excel formulas to create those Excel financial models. That certification you can do. So it will help you to land on a job for a financial analyst.
We have an interesting question. What are the core skills to learn to become core skills to learn to become a financial analyst in investment banking company like BlackRock?
Okay, so BlackRock, you have to have MBA from top tier school. Yeah. So BlackRock don't consider any individual from any top tier 3 or tier 4. They have to have the tier 1 and tier 2. Second is you have to have some professional certifications on your hand. If you have done your MBA, fine. If you have done your MBA from top tier 1 school, fine. But you have to have some professional certifications. Like I said, CFA, CPA, and CA. CA is more to all together another line. But yes, CFA and CPA, yeah, you have to have, or FRM, financial reconciliation, or or maybe I can say FMVA, financial modeling and valuation analyst. That's a certification course you have to have if you want to land on a job for BlackRock. And BlackRock doesn't consider. You have to have your resume more concrete. Your experience and skills have to be on point, because BlackRock, they you mail back BlackRock, like BlackRock companies or the UBS companies, like big companies, big investment banking companies. They see your resume and they'll throw it out. Don't even bother by throwing out your resume. You have to point out what are the skills you have, what are the things you have done in your past, what are the numbers. Make it out, point it out. Then you can have an interview process for that. It's harsh, but it's a true thing.
True. We have a question. Forecasting and project report for the organization both are same or not?
Sorry, what?
Forecasting and project report for the organization both are same or not?
Forecasting and
Project
sorry,
reporting.
project reporting. Okay, no. This is different things. Project reporting is means like you are doing you are dealing with a particular project. You have given some certain projects, like for example, like um for example, in a particular industry, if I am creating my sister company, or I am creating a new uh, particular department or particular sister company to have this in operations in a particular state or something. I'm just creating my sister's companies everywhere to have this products and services in on a particular state or a particular country. So it is my individual sorry, it's the industry itself, products. It's my industry only. I know the industry, but it's a certain product, it's a certain projects. Okay, so for that country or specific country, I'm setting up my industry or my company. That is certain some project which I'm reporting to the stakeholders. Okay, this is the thing I need to do. This is the country specific. This is the population in that country. So this is the project report I'm preparing for that setting up. Financial analysis, financial reporting, or budgeting is means I'm budgeting certain financial statements to make informational uh, display to the stakeholders, and on that informational representation, the stakeholders can take strategic decisions upon that. Okay, so this is the new venture I'm venturing it, or this is the new budget which have been there. So what are the market situations there? So budgeting and project report is two different things. Well, like say, yeah, so both need actual research or need a financial research work.
Okay, how to start a career in financial modeling? Please explain in detail work of a financial modeler and what will we need to learn for financial modeling.
Okay, so like already mentioned, is like you have to have a professional certification first of all, be it CFA, be it FMVA, financial modeling and valuation analyst, be it FRM, uh, be it CPA. Have to have some professional certifications first in hand. Then you have to have, you know, experience on creating financial models. Okay, so just take an example of any company. Take take any example company. Just go through their financials and, you know, prepare an Excel model just for yourself, and then see how my financial model works. If I change anything, does it affects anything, or does it remain stagnant? So, you know, it gives you an idea. Okay, how these things works. So for a financial modeling thing, you have to have certain certification which gives you certain training and things, uh, to be on that path and in that industry.
And
Yeah.
how we get that much of company data?
Okay, so that data is available in the market. If you go to any public company is already available in the public domain. Okay, if I talk about Indian companies like, you know, these ONGC, big company, Reliance, it's all public companies. So public company data is available in their website also, or if you can search in Google, it will pop up.
Sir, any suggestion for shifting career from accounting 3 years towards finance related, and what should be the ideal roadmap to utilize past experience as present profile?
Yeah, so that's a good question. Yeah, so many of, like, you know, many of my colleagues and my, you know, industry colleagues have been doing this. For me as well, I've started my career as a data analyst and then moved to a financial analyst. So that was easy. That was, you know, research based, and then need to add some financial research to it. But for a core accounting and going to a core finance, it's something, not difficult, but it's like something you have to unlearn some of the things. You have to have addition of the core financial thing like corporate finance or capital, cost of capital things, or capital budgeting, or how capital budgeting works, or how a DCF works, or how a valuation works. That things you have to learn, but you have to have the background. So that background of accountancy will help you to understand how a financial statements, you know, works, how a standard statement looks. Okay, is there any variance? You can analyze because you have a background of an accountant, so you can analyze those. I've already said in my slide, on my one of my slide, that you have to sometime you have to become an accountant, because you are doing a financial analysis based on the financial statements only, right? So that financial statements you can see and you can analyze by looking at it. Okay, this is the things has happened in the past year. This is the revenue. This is the expenses. What has happened? Why the revenue has decreased? Why the expenses have increased? So that will help if you have a knowledge of accountancy, which we have in hand. Yeah.
Okay, we have a question. Currently, I'm doing BCom and ACCA in finance specializer. Is it important to go masters?
No, my concern, no, I guess, because I've seen many professionals doing BCom and then jumping into CA and ACCA. So it's fine. You can complete your ACCA and all the best for that. Yeah, you can do.
And
Nothing to worry.
can a student from a non-finance background go for a core finance career? If yes, what are the basic requirement one should have?
Yep, of course. I have seen many engineers doing CFA. I have couple of colleagues in my organization as well who have done engineering, like civil engineering or electrical engineering, but they are completed their CFA, Certified Financial Analyst courses, level 1. Some of them are level 3 as well, and then doing fine. You can do it. There's nothing impossible in this current market, in this current scenario.
Any other questions, students? Yeah. No more question, I guess. I believe, Dheeraj, you're
Yes,
excited.
I have.
Okay, yes, speak.
Yeah, sure. Yeah.
I'm background from criminology, but I have to make a career in financial crime. It is a possible way to get criminology into a financial crime job.
So can you repeat it? Right? I lost you somewhere.
I have a background from criminology background, and I have to make a career in financial crimes.
Uh-huh.
Is this
Okay.
any definite path to get into from criminology to to a financial crime jobs sector.
Criminology. Okay, so you're more often to something called um,
What?
LLB or something. Law. You have done law,
No, no, it
like
was
criminology.
no, no. I am not don't pursue any law degree, but I have a pursue a criminology degree.
Okay,
It's just a bachelor.
okay. Understood. Okay, but see, the the very first question, if I ask you why you need to change those careers to others, is it something is the industry is not working, or is it something you have
No, no,
you're
I have
not
a relevant experience in criminology sector, but I
uh-huh.
have researched internet and all those kind of all some research and research work on internet. I find
Uh-huh.
something interesting about this sector, financial crime. I have
Mhm.
also seen in the openings of various companies that
Okay,
financial
okay,
crime is required in companies.
okay,
So I need to take guidance from you.
okay, sure.
What is
Okay, so yeah,
the
yes, yeah, you can jump into that career, but like I said earlier, you have to have you first of all you have to have that clear mindset why I need to jump into this career. Okay, this career can give me what I wanted, what I need to achieve. Money is on the other hand of this, on the other part of it. But first of all, I need to have a clear idea why I need to jump into this career. Does this career provide me any benefits of it? And the second part is you have to learn some of these these financial skills. You have to learn accounting, you have to learn core financing thing. So we have to do certain certifications for it. And then also, yeah, you can see everyone can jump from a non-financial career to a financial career. Is it very It's very easy to do, but it's difficult sometimes when you have a no clear idea, and when you are struggling in between. Okay, this is a thing I can't do, I cannot understand, I cannot analyze, I cannot visualize. So that is something you have to have a clear mindset, and then you can of course you can go for it. But the second first thing is that you have to have some financial knowledge or financial skills, and that you can learn by getting into the MBA or getting into any professional certifications. Am I able to answer your question, or is there something I missed out?
no? Yes, I understand.
Good. Okay. Thank you.
Any further questions, students? I believe all the answers are given by Dheeraj would be understood. So thank you, Dheeraj, for your time and consideration. We believe that your expertise and insights would be valuable to our students.
Thank you. I thank you so much for allowing me and welcoming me to give a on a lecture of financial forecasting. But yeah, it was very good. I believe my these buddies and these guys have learned something from it. See, every day is learning. I have learned. I learn every day. So it's part and parcel of our life. We have to learn something. We have to unlearn something sometimes. And yes, yeah, very much overwhelmed and very much happy to be a part of it.
Thank you so much for once again for your time and
Very
consideration
good.
and wonderful content. We're looking forward to our future sessions and opportunities.
Thank you so much. Thank you so much. I'll be looking forward. Thank you so much, guys. Thank you.
Thank you everyone for joining. Please do join our WhatsApp group for certification and the PDF shared by Dheeraj. Thank you everyone.
Thank you. Thank you. Thank you.